Hello YouTubers, and welcome back to a update on the Trading 212 portfolio, and we're going to also look at some of the other portfolios that we got. So as you can see, looking pretty horrendous. We are down 43.9%. Just a minute, I'll repeat that. We are down 43.93%. But don't worry, there's a reason for that. Right, I shall explain. So, this particular portfolio, what I decided to do was actually cash in a whole load of shares and stocks that were all in the green, all in profit. So, I cashed them all in. That amount of money I have transferred around into various other assets. So, you can see here I've got currently £7,200 free funds. I had actually, as you probably know from my other videos, I've got a big build going on at the moment, a bungalow which we are extending. The inflation increases on some of the materials has meant that I've had to draw out some of these profits in here. And what I have done is I have actually left the 4 stocks that were in a minus. As you can see, these are Airbnb, Block, or what used to be Square, PayPal, and Robinhood, and they are all down. Well, apart from Airbnb, they're all down pretty significantly, close to almost 50% on each one of them. So, the reason why I've done that and left those ones in is because I don't want to crystallize those losses. So what will hopefully happen over a long period of time is these prices will recover, they'll go back up, and then obviously I'll be able to recoup that money. If I was to cash in those or sell those shares, then obviously that loss of 43% or 4,000 odd pounds will be crystallized at that point, and that's quite important to note. Trading 212 do a bit of a funny thing where they don't actually tell you this £7,000. Obviously, in reality, that was actually more like about 20 grand, but obviously, I've drawn out some of that money, as I explained in just a minute ago. But out of that money was probably about 6,000 to 7,000 pounds worth of profit. So actually, if you put that back into the portfolio, then we would be 3,000 pounds in the plus. Obviously, as a percentage, I'm not too sure how that works, and the algorithms that they use obviously get to the point where we are only looking at the 4 stocks that we've got and how much percent they are down, and it doesn't take into account obviously the profit here. So that's why the figure looks pretty horrendous. Having said that, I will, when the financial year renews, I will probably continue to plan to put some more into these to dollar cost average them down, and maybe buy some other stocks. Hopefully, I'll finish with this build and it won't go too over budget, and we'll be able to put some money into there. One thing that's important to note with Trading 212 is whilst you get a £20,000 a year ISA allowance, they are what they call like an input only style ISA. So if you put say you take your Barclays account or any sort of high street bank, or somebody like Vanguard, for instance, the money you put in, so you put £10,000 in, if you then decide you suddenly need that £10,000 back out, the issue with doing that is that you've effectively chewed up £10,000 of your ISA allowance, and then you've drawn it back out again. So input only, like Trading 212, can't cater for the fact that you've drawn it back out. And then if you then say put it back in, £10,000, you would have used up your whole year's allowance with them. So I can't actually put any more money in, despite the fact that obviously I've drawn out what is perceived to be considerably more than what I've put in into the portfolio. So that's really where we're at. Obviously, I'm not going to go into too much detail with these stocks, but these financial ones here have had an absolute of a hammering of a time. PayPal was doing all right until recently, and then there was an earnings issue with it, so that stock has dropped as well. So let's flip on over to the Freetrade portfolio and see how that's doing. So here we are with Freetrade. Obviously, as you can see, that isn't down anywhere near as much. 21%, and that's a total loss of £1,200. So what's going on in here? Obviously, we've got Apple up a tiny amount, Neo's down, Alphabet is pretty much flat, Matterport is a massive 44% down, and then the others here you can see Meta. Obviously, there was an earnings call, and there's issues about whether or not they'll be profitable in the future, and the rest of the stocks here as you scroll down. I'm not going to micro analyze too many of them. But yeah, as you can see, not many of them up at all. Most of them are way in the red. What I'm continuing to do is just dollar cost average into these things. So as you can see, Apple, Neo, Alphabet, they've had a considerable amount of money injected to them. And then second to that, you've got Matterport, Microsoft, Meta. They've probably had similar amounts. And then you've got the kind of Etsy, Robinhood, Disney. So as you can see, I've kind of got sort of three stocks which are 700 plus. Obviously, I put a bit more into Apple. I do like their products and I do believe them for long-term strategy growth. And then four stocks at £400, four stocks at £300, and then three stocks at £200, and then so on. And the rest are obviously all smaller amounts. So that's my strategy with that one. Again, I'm hoping that these will recover at some point and get into the green. Obviously, there's a little way to go to get back on this loss of 20%, but I am hopeful that probably pumping more money into some of the bigger stocks and also dollar cost averaging down on some of the ones that have dropped considerably probably will help this portfolio for a short while until it recovers, and then hopefully it will grow from there. These are long-term investments. I don't want to crystallize the losses as per the trading 2121, so I shall not be selling. So let's have a quick flip on over to the Vanguard portfolio and see how that's doing. So here we are with the Vanguard portfolio. Obviously, as you can see, there's a few sections to it. So we've got a pension section, which I really only just started. I haven't really put an awful lot into there, only a few £100, just to really give it a test. I am looking to set something up with that. And then you've got the ISA here, which has given us a return of £1,400. So that pretty much wipes out the profit on the, or the loss, sorry, on the trading 212. And then we've got this thing called Futures Pot, which is actually just a general investing account. They allow you to name your pot in with Vanguard. So basically, I called it a futures pot. Don't really know what exactly it's for. Maybe for my kids for first car, house, university, something like that. But as you can see, that's down 0.61%. So this portfolio is faring quite a bit better than, say, the individual stocks. As you can see, we're up a reasonable chunk here. And then obviously some of the portfolio is up and some of it is down. So overall, this one is doing pretty well, which is kind of what you would expect because they're basically ETFs, so they don't fluctuate quite as much as stocks and shares. But obviously, the returns are potentially not quite as high. Again, with the losses obviously higher. So that's that really. So that's the overall portfolio. If you take into account this is marginally higher return than say the trading to Freetrade account, £1,200 loss, and then you take into account that the free trading 212 account. The profit in there I have cashed in and realised on that, which is pretty much only about £2,000 more than the loss there. So that makes it a total portfolio gain of about £2,000, which against probably, I mean, we're looking at the best part of about 40 grand here invested overall. Obviously, some of it's down, some of it's up. Then we are looking, I mean, I don't know what that is, but 10% would obviously be 4 grand, so it's about a 5% return, give or take, over the whole thing, really. When you add everything all together into one big pot, that is really roughly speaking, where we're at. I have actually got a pension with SJP as a pension provider in the UK. It is super complicated to log in. They like their security levels. It's not something that I can particularly do on the screen here, so I can't really show you that, but that is a similar value to this ISA, and it has given me around about £2,500 return as of yesterday on that. So yeah, total market returns are probably in the region of around 7 or 8%, which is pretty average. So considering obviously we've gone in the highs and the lows and the rest of it. But you have to remember that some of the money that I've drawn out, I've obviously invested that into property. I haven't just spent that down the pub having a nice time. So basically, that money is obviously then invested into real estate essentially, which is obviously going to return a profit. If you look at my ISA, for instance, I think there's like a graph here, so you can see here we are. So around this time here, around about October time, 2020, I drew pretty much all of it out because I was trying to purchase a property at auction. That property itself is currently been remortgaged, refinanced. We've got money back out of it. Some of that money is this money that's back in here now. And that property is now cash flowing after the mortgage and service charge around about £500 a month. So obviously we're looking at about £6,000 a year profit before tax, which if you then compare that to these annual returns, obviously they're quite a lot higher. So that profit is allowing me to continue topping up these ISAs and so on. Obviously, they're, as you will have seen from the other YouTube videos, they're not the only properties that I own. So we've got a handful now. Anyway, I hope that's a really useful insight to you as to exactly what I'm doing, a little bit about not crystallizing your losses, and really an overview of the portfolio. I know I haven't done one for a while, so hopefully this is quite useful to everybody. If you do like the video, please do comment below, hit the like button, subscribe to the channel. I'm really trying to get the watch hours up and the subscribers up and so on. As you may or may not know, I did some speeches recently on compound interest and savings and the dangers of credit cards and stuff like that. I would try and do some more videos like that, but please do appreciate that the property development side of the of my life is really time consuming at the moment, and finding the time just to kind of do all of this as well is a bit testing at times. So hope you like the video, and please don't forget to subscribe, hit the like button, comment below, all that sort of jazz for the YouTube algorithms, and I shall see you next time.